Hi grade 12s and welcome to another video on cost accounting. So I have spoken to you and broken down the manufacturing costs in terms of we divided them into manufacturing costs for direct material, direct labor, and factory overhead costs, which include indirect material, indirect labor, amongst other costs as well. And so now I'm going to look into classifying those those manufacturing costs, right? And we're going to look into other calculations as well, which are important because you're not always going to be given the information that is singular. You're not always going to be given specifically direct material, direct labor, and all of that stuff. You're going to need to calculate to get around to find the answer that you want. So if you're calculating total manufacturing cost, it's not going to be the same as it was before. It's not going to be a different calculation, right? So if you look at my board, we're going to look at the first classification, which is fixed costs, right? So fixed costs are those costs that don't change no matter what happens in the business. So whether or not we produce or manufacture, let's say 60 shirts. Let's say we need to usually produce 60 shirts. Even if we produce 40 shirts this month, that costs, say, rent or that cost needs to be paid no matter what in full. So it is unchanging, it is constant. That is what we record as our fixed costs. So I'm just going to highlight that for you now. So our fixed costs are those that don't change, is the operative word, change even if production ceases. So even if we were not to make any product, we still have to pay this rent, right? Then variable costs. Variable costs change with changes in value. So first we were saying no matter whether we manufacture 90 products or we don't manufacture any products at all, we're still going to need to pay that specific cost. But for variable cost, as the price of material or So this is a cost that we incur upon operation, right? And if it is directly proportional with the number of units. So as number of units increase, variable cost increases as well. So VC increases as well. So it's a directly proportional relationship, which basically says that the more products we produce, the higher that cost becomes. The less products we produce, the lower that cost becomes, right? And I did say that it was going to be another way for us to calculate total manufacturing cost, different from the video before. And so this time we say total manufacturing cost is equal to fixed cost plus variable cost. So like I said, before we were using production costs, prime cost and fixed overhead costs to calculate our total manufacturing cost. But now that we don't have those units, we might not have those units, we are able to use fixed cost and variable cost to calculate total manufacturing cost. Then if we look into unit cost, which is basically the total manufacturing cost versus the number of units produced, that will give us our unit cost. So how much does each unit cost if we're using the manufacturing cost amount to determine and manage manufacturing cost variables, right? And then the next concept I want to discuss with you guys that I feel like you need to just listen very carefully to is the break-even concept, right? So we do know the fact that people start businesses to make a profit, right? But it won't make a profit right away. There are steps in the sense that you could first be making a loss. So naturally you make a loss at first because you're still covering your cost that it took to start the business in the first place. Then you get to a point where with the money that you're earning, you're able to cover all of your expenses. That is the break-even point, where there's no more, no less. We're just able to cover our expenses. And then there is the point where you're making profit, which is, okay, so now that we've made profits and now that the money has leveled out, we're going to make sure that we get to a point where we're now making a profit. And so how many break-even analysis basically constitutes of how many units must be produced so that expenses equal the income. So this is the main equation that you need to, This is the main equation that you need to keep in mind when we're talking about break even, right? And there's a calculation to it. You did the calculation last year. I hope that you have that calculation in mind. If not, I might put it in for you in the next video. But other than that, like I said, break even, you have to consider the fact that it needs to be equal. Expenses and incomes have to be equal, no more, no less. And this is how we know that our business is no longer making a loss, but neither is it making a profit, and we need to find a way to then increase that margin so that the business is making an income or a profit, right? So I hope that this helped you. Like I said, easy stuff. Like I said, practice more than anything else, because accounting is a practical subject. But I hope that this helped you, and I hope that you have a better time studying because of this video. Other than that, thank you so much for watching, and goodbye.